Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into Douglas Elliman's latest filing, and trust me, after reading this, you might be tempted to invest in a really comfortable chair because you'll be spending a lot of time watching real estate prices. Douglas Elliman, a big name in the real estate game, just dropped their latest financial report. We're going to break down what it all means. Think of it as your cheat sheet to understanding where this company is headed and whether it's smooth sailing or choppy waters ahead in the housing market. This report is dated March 11, 2025, so it's hot off the press. This is their 8K filing, which is basically a quick update companies give to keep investors in the loop about important events. The main event here is that Douglas Elliman is sharing how they did financially for the last 3 months of 2024 and the whole year. To get the full picture, they released a press release with all the details. We are going to dig into this press release to see what's really going on. So how did Douglas Elliman perform? Let's dive into some key numbers from the fourth quarter and the entire year of 2024. Keep in mind that the real estate market can be a roller coaster, so we want to see if they went up, down, or stayed steady. The press release mentioned some key people giving their thoughts. These comments may be filled with corporate speak, so let's try to see through what they are really saying. Howard M. Lorber, the chairman, starts off by saying that while 2024 was tough because of high interest rates and low sales, the company still made money and is ready for the market to get better. In other words, it was a rough year, but we are still here and hoping for better times. Julia Sanchez, the president and CEO, pointed out that they are focused on making the company stronger, cutting costs, and using technology to get ahead. We're tightening our belts and getting smarter about how we do things is the essence of her comments. And J. Bryant Kirkland III, the money guy, mentioned they're keeping a close watch on expenses and have a good amount of cash available. He is saying, we're watching every penny and we're not broke yet. Alright, now for the actual numbers. The report highlights the fourth quarter of 2024. What's crucial here are the underlying trends, not just the raw figures. Total revenue for the fourth quarter was $207.2 million, but compared to the same time last year, it went down by about 14%. Less money came in, and that's a clear sign that they sold less real estate or that real estate prices went down. The company reported a net loss of about $16.9 million. This basically means they spent more money than they made. Last year during the same quarter, they only lost $6.8 million. That's not a good sign. Let's look at the whole year to see the entire picture. Total revenue for the year was $926.7 million. Again, lower compared to 2023 when they made $1.06 billion. That's more than a 10% drop, which shows the business is not growing and might be shrinking. The net loss for the year was $42.4 million. This is a big jump from last year when they only lost $7.5 million. It shows that the problems they had in the last 3 months of the year are just a continuation of existing problems. On the bright side, they still have $181.1 million in cash, so they can keep the lights on for a while, but they need to turn things around. The main business of Douglas Elliman is real estate, so it is important to see how that part of the company is doing. Real estate brought in $198.4 million in revenue for the quarter, which is 14% less than last year. For the whole year, it brought in $889.4 million, which is again less than the previous year when it was $1.01 billion. Besides just selling houses, Douglas Elliman has other ways of making money. Let's see how those areas are doing. These other services brought in $8.8 million for the quarter and $37.3 million for the entire year. Compared to last year, these numbers are roughly the same. Now let's talk about expenses. It's crucial to know how they're managing their costs. Are they cutting back enough or are they still spending too much? The company mentions they have been trying to spend less money. They reduced what they call selling, general, and administrative expenses by $2.2 million in the fourth quarter. For the whole year, they managed to save $33.2 million compared to the year before. It is good that they are spending less, but given how much revenue is down, it does not seem like it is enough. Now, the report also mentions some non-GAAP financial measures. This is basically a fancy way of saying they're using some different ways to calculate their financial performance that are not standard. Companies do this to try and show their performance in a better light, so investors should take this with a grain of salt. One of these measures is called Adjusted EBITDA. Basically, it shows how much money the company is making before paying interest, taxes, and some other things. For the fourth quarter, this was $1.3 million, which is way down from last year when it was $11.7 million. For the whole year, it was $16.7 million, but last year it was $48.3 million. Again, all bad signs. So, summing it all up, Douglas Elliman had a tough year. Sales are down, they lost money, but they are trying to cut costs and hoping the market gets better. They still have a good amount of cash, but they need to turn things around quickly. Now, looking at these results more broadly, Douglas Elliman appears to be facing significant headwinds. The drop in revenue and the increased net loss are concerning. While cost-cutting measures are a positive step, they may not be enough to offset the decline in sales. The company's reliance on the real estate market makes it vulnerable to fluctuations in interest rates and economic conditions. Given these challenges, a conservative approach to investing in Douglas Elliman might be warranted. Investors should closely monitor the company's performance in the coming quarters and be prepared for continued volatility. Thanks for watching. If you enjoyed this video, please subscribe, like, and comment.